Now that we know what is the amount to invest, now let us kind of understand where to invest, right? That's very, very important next step. So we kind of understood that in capital markets we have various categories, right? From government bonds to fixed deposits to corporate bonds, mutual funds, debentures, ETFs, chit funds, and so on and so forth. And lastly, we spoke about stock market equity shares. Now, in this curriculum, I will not be discussing all the first 6 or 7 aspects of it, because those are all something which anybody can kind of learn. It's very easy to kind of pick that up. But what I'm going to be focusing is on stock market equity shares. That's the whole context of this learning, whole context of decoding stock trading, right? So we're going to go very, very deeply into understanding how you can approach investing, especially when it comes to stock market equity shares, investing in equity. So let's kind of understand that. And if you're ready to kind of really understand, just this one knowledge will kind of help you start your journey of investing. Even if you make, a very small amount, 500 rupees a month, 1,000 rupees a month, 10,000 rupees a month, it will simply kind of be great. You choose what is amount and then kind of go and pick those up. So how to kind of really do this? Right? So now, this is something called as a top-down approach. It's called as top-down approach. Pay close attention. Now, it is not, I told you stock market is not a random act. You simply don't go and pick up any stock randomly just because somebody is telling about that, just because somebody is talking about that, just because everybody else is buying that stock. No, you don't kind of do that at all. So now, but what do you do? How do you approach that? First and foremost, every year you have to understand what is the government's vision in the country in which you live. What is the government looking to do when it comes to the economic policies over the next 5 years, next year, 2 year, 3 year, and then ideally it is 5-year view, but at least if you can find out this year what's happening, right? That's going to be a big first move. So ideally look at what is the government's vision in a longer term period. What is that the government wants to prioritize? Is the government going to prioritize health in your country? Is the government going to prioritize infrastructure in your country? Is the government going to prioritize power in your country? Is the government going to prioritize defense in your country? Is the government going to prioritize digitization in your country? So what is that government going to prioritize? For example, in our country, in India, say 5 years back, when the government came in, they started prioritizing on few things, like they started prioritizing on digitization. They started prioritizing on Swachh Bharat, that is the cleanliness all over, right? They started prioritizing on Make in India. So now when they started doing those things, and they also started prioritizing heavily on infrastructure, right? When these things were the big government's vision, from there your thought process should start to trickle down. From there, you will have to look at key areas of focus. Basis that in that bigger vision, what are the key areas they will do? If they say yes, they want to kind of do something in Make in India, within that, what are the areas they're going to focus on? Are they going to focus on what kind of components manufacture? Is it going to be digital products, or is it going to be auto products? What are those which they're going to focus? The key areas of focus within that bigger vision. And from there, with that, you will have to understand what are the impacted industries. So now, for example, if infrastructure, giving the world-class infrastructure is the vision, and in that they start to focus on roads as first, and then in the next year maybe trains, railways as the next infrastructure. If those are the 2 areas of focus, now we know what are the industries which will get impacted. All the construction industries, the road construction industries will get impacted. Steel industry will get impacted. Cement industry will get impacted. If it is focused on railways, we know coach building industries will get impacted. Electronic components will get impacted, and so on, so forth, right? So, and from there, you'll have to go to the sub-industry. Within that infrastructure, right, what are the sub-industries which will get impacted? If it is cement, yes, what kind of cement? If it is steel, what kind of steel? That way you have to come to the sub-industries which are impacted. And from there, you will identify what are the organization and companies in that sub-industry. And once you know, you pick up top 10 from there, top 10 or top 15 or whatever you pick up, and from there you will have to segregate that between small cap, mid cap and large cap companies. In every industries you have, these small cap, mid cap and large cap. What are these? I'm just going to come and explain about this market capitalization in a bit, but you will have to segregate that in these three categories. After you do that, you will pick up top 5 companies in each of those categories. Top 5 in small cap, top 5 in mid cap, top 5 in large cap. And once you have that, on that you will apply the basic ratios, all the basic ratios. You kind of pick up ratios like PB ratio, debt equity ratio, earning per share ratio, or interest coverage ratio, and fair market to book ratio, and all of that you kind of figure out. And wherever you see the favorableness of those ratios, from that you will pick up top 2 or 3 companies in each of those market cap, and to that you will start to invest. And that is how you approach investing in stock market. It's not a random act to simply go. So when you do this, especially for investing, you will be on the right side of the economy. Whatever we are trying to drive, whatever the government is trying to drive in that country, you will be on that side. And government or the industries which are impacted will also focus on those areas where the business is heading towards. That's how even government will also start to focus on, right? Given that now you see you are neatly aligned, it's not a random act. With this top-down approach, when you do, you start to see that all the stocks what you pick up, and remain disciplined in that. Now if you know that government is going to have a 10-year view on this, just remaining in those companies, you pick up top 2-3 companies in each of those mid caps, so you'll end up having around 6 to 10 companies, and every month you segregate. Say you are kind of investing say 15,000 rupees or 20,000 rupees every month. Now you will segregate 2,000 rupees in each of those companies every month, and simply keep kind of buying those shares worth of 2,000 every month in a very disciplined way. And in 10 years, you will notice what happens. Use the formula what you learned in the previous video. Check if you do this, what is it going to do to your investment, and pick up some of these stocks like that. Go back 10 years and see if you had started 10 years ago, what would you have earned today? What would your wealth be today? Right? That will only give you a opening into the possibility. While that will give you an opening into possibility, nothing is lost, people, because you're going to learn how to trade as well, and there the ROI is even more better, and very soon you will be back on track if you are not still on the path of financial freedom and wealth generation. So I hope you kind of got a view on how to really kind of invest in stock. So before we kind of move to the next video, I want to share this part. I want to share this thinking, which is investing in stock market, people, is a science coupled with disciplined habit. We kind of saw that. One is the habit, how just 100 rupees every month, what it can do, 5,000 rupees every month, what it can do. At the same time, that habit coupled with the disciplined habit, coupled with scientifically understanding the market from top to down, top to bottom, from the macro level to the micro level, when you approach that and understand the instrument which needs to be invested in, you will see your journey of investing, your journey in the wealth creation and becoming financially free is going to be that much more simple and that much more easier. In fact, it's so easy, it's just that it has to be brought into the ambit of discipline. So if you're kind of getting this, type in the comment, ready for the right habit. Type in the comment, ready for the right habit. I'll see you in the next video, where we're going to talk about the instruments for investing in stock markets. What are the stocks to pick up? I know some of you might be all eager to kind of pick up those stocks, so I've kind of done some of my own research, and I'm going to give you few large cap and few mid cap and few small cap, and also a few other categories of stocks, which if you're interested, you can kind of start picking some of those up and being disciplined over a long period of time and invest. See you in my next video. Have a nice time.